Hello adventurers, AI is everywhere right now. It's writing code, it's generating art, it's even voicing over YouTube videos. But while this video may use magical voice, the real-world money in your stash is no joke. Right now, the industry has been promising to use AI to multiply that money for you. The pitch sounds incredible. Just hand over your controller, consult the oracle and turn on auto battle. Then, watch your stash grow while you sit back and relax. Well, spoiler alert. It's a trap. Leaving your wealth entirely in the hands of an artificial oracle is a terrible idea. Today, let's explore why the ultimate financial cheat code doesn't actually exist. And why you should never trust self-proclaimed gods when your real-world inventory is on the line. Managing a sprawling inventory across multiple vaults takes time. Balancing your asset ratios, ensuring your defense stays strong while your attack power grows, is a constant grind. Enter the AI account. It promises to take over the grind completely. It doesn't just passively hold your assets. It claims to dynamically auto-balance them based on what the machine predicts the market will do next. If it thinks a storm is coming, it automatically shifts your gear to defense. If it thinks a boss is weak, it shifts to attack. It processes data, reads the charts, and executes the trades while you are away. But here's the catch. This AI wrap is more like an AI trap. Markets are not predictable player versus environment dungeons. They are chaotic player versus player arenas driven by human emotion, panic, and unpredictable world events. We all generally agree that markets are fundamentally unpredictable. But here is the secret. AI is also unpredictable. It hallucinates. It overreacts to noisy data. It acts like a hyperactive gamer mashing the controller based on short-term signals, lacking any real understanding of long-term strategy. When you try to navigate an unpredictable scenario using an unpredictable tool, you do not gain control. You introduce more uncertainty. It's like trying to navigate a quicksand pit using a compass that randomly spins in different directions. Two variables of chaos do not cancel each other out. They just ensure you sink faster. If you don't believe me, let's look at the actual stats of an AI trying to play the game. Take a look at the Amplify AI-powered equity ETF, ticker symbol AIEQ. This fund uses a literal supercomputer with IBM Watson AI to pick stocks and balance its portfolio. It is designed to be the ultimate, all-knowing oracle. It reads the news, analyzes social sentiment, and trades aggressively. Its turnover rate is massive. It is constantly swapping out gear to chase the next perceived advantage. And the result? While in the past 5 years it showed a modest 18.6% gain, SP 500 bolsters 68.7% appreciation, the Dow Jones 50.6%, and even a total US stock market ETF gained 61.1%. If you take an all-country index like MSCI ACWI, it is a 51% gain without the Dow concentration. And these are in dollars. If your account is in yen, you can add around 15% gains there, very roughly speaking. Any basic, passive index fund beats the supercomputer by far. The machine worked infinitely harder, generated far more trading friction, and still lost to players who just equipped their starter gear and walked away. At this point, the AI seems to have made an active effort to lose your money. Another example local to Japan comes from the swarm of robo-advisors available. Take a look of SBI's AI wrap account. The AI rebalances your portfolio every month across different assets. Through exclusive funds, I gave some money to it 3 years ago, and you can see it claims to have produced over 40% in returns. Not bad at first glance, but just look at the breakdown of the assets to spot something odd. This AI balances American stocks, developed countries' stocks, emerging market stocks, American government bonds and high-yield bonds, American real estate, and gold. Taking a closer look, it turns out it lost money on gold across the last 3 years, despite the yellow metal doubling in price even after losing ground this year. How come? The super-intelligent oracle actively decided to buy lots of gold near its historic peak value, and sold it later when the price fell abruptly, instead of simply rebalancing the portfolio. A simple dollar cost average would have make you money instead of losing. And let us not forget these AI operate for a fee. 0.75% for AIEQ, 0.6% for SBI's AI wrap trap. While the salesperson will likely say that these are just examples and their product is better than that, I doubt you'll ever see data to back the claim that AI is a good wealth manager. So, if we seal the unpredictable oracle away from our stash, what is the alternative? Simplicity. You don't need a predictive supercomputer to keep your inventory balanced. You just need rules. Here are 3 strategies that work far better, keeping risk in check without introducing new layers of AI chaos. Number 1. Broad index funds. The simplest path is to buy a low-cost, all-in-one index fund that tracks the total market. It requires no rebalancing or complex decisions. You just buy, hold, and let the market do the work. Number 2. Target date funds. These funds automatically shift your asset allocation from growth to preservation as you approach your target date. If you want to reduce your risk automatically with a target in mind, there, set and forget vehicles perfectly aligned with your long-term timeline. Number 3. Balanced funds. These funds, such as the Emaxis Optimized Balance, provide a preset mix of assets that are automatically rebalanced by the fund manager. They offer 5 modalities of balance based on soccer positions, and a risk assessment test called Portstar, with a T, that helps you choose a suitable balance for yourself. So, is AI completely useless in your finances? Absolutely not. You just have to equip it in the right slot. Don't use AI as your autopilot. Use it as your scanner. Think of it like an enchanted spyglass. It can summarize complex financial reports in seconds. It can compare various products at once if you need. It's a fantastic tool to gather intel. But when it comes time to actually make the trade, you need to be the one pressing the button. In conclusion, don't let a bot play your character. Cast your spells with your own hand, use the oracle to light the way, and protect your stash yourself. And if you want AI flavor backed by real human knowledge to help you, don't forget to like and subscribe to this channel. Until next time, may your stash overflow, and your game level up.